Welcome back to Bunnex Investment Group. In this video, I'm going to teach you a setup that you can use and make it your A+ setup, repeat it, rinse, and do it again. So without wasting much of your time, let's jump right into the video. So in this video, I'm going to teach you one, how to locate the peak formation high or peak formation low, and two, how to find what we call the peak reset point, because this pattern will require you to know what we call the peaks. So what is a peak? A peak is actually a point of reversal whereby the market has gone to the upside or to the downside, and at those particular points it will reverse. How do we define that particular reversal point? Peak will come after 3 days of rise or 3 days of drop, or basically will come after 3 levels of rise or 3 levels of drop. After those 3 levels of rise or drop, there will be another peak that will be a trend continuation peak, which we call a reset peak. All right, so this is USD against Mexican peso. And in this particular instance, we can see that there was 3 levels in one particular direction. We can see this particular point as the highest point that we have, meaning we had level 1 and a pullback that was issued. And then we had this as level 2 and a pullback that was issued here. So we can see 1, 2, and then 3. At the third point, we expect to see a market reversal, which we call a peak formation low. So like in this particular case, we had this as our peak formation low that was issued. It had 3 legs, and in the normal traditional trading context, we call this a 3 hits to the bottom, or basically a triple bottom. So in this particular case, we expected to see a reversal which was issued. In this particular video, we are not going to be talking about the setups that you need to look, as well as the trade entry confirmation that you look at third level points. I talk about that deep in the top 1% traders course, which you can be part of using the link that I've left in the description box below. All right, so basically after 3 levels of drop, we expect to see this peak formation low. So that is the first step of how you determine a peak formation. It might be a peak formation high or a peak formation low, which comes after 3 levels to the upside, or basically 3 levels to the downside. After that, we can see there was an M pattern at the white EMA, which is the 200 EMA. Some loves to call it the Mayo. It's actually a governing EMA that market makers loves to use for resets. So in this particular case, an M was issued, first leg, and then second leg, meaning this was now a peak formation or a peak reset point, right? So the first step that you need to do when you come to the charts is to basically locate these peaks, either as peak formation low or as peak reset. And after locating those peaks, you now need to find points of entry away from those peaks. All right, so let's now have another variation of these peak formations high and peak formation lows. We can see that on USD card, we had something like this. On USD card, what did we have? We can see from this particular lows, we had 3 levels to the upside and created a reversal point. This was level 1 to the upside, and then we had level 2 to the upside, which is this one. And then we had a flash to the upside, which was this one, creating what we call a variated peak. This variated peak came as an head and shoulders pattern. We can see the first push was actually the shoulder, and this was the head, and this was a shoulder. So peak formations high and lows can as well come in this particular manner, where we have head and shoulders patterns after 3 levels of rise or 3 days of rise. You can see day 1, day 2, day 3. And from these peaks, that is where we want to trade away from. You need to first find context and bias before you do anything pertaining this particular setup that I'm now about to show you. So what is that particular setup? We've seen that market makers loves to use M and Ws in terms of trending, in terms of reversal. They love to use Ms and Ws. So basically, we are going to be looking at these Ms and Ws away from validated peak or validated trading context. So these M's and W's have some several characteristics that you need to look at before you act. So if we go, this is NZD against JPY, we can see that the market was actually coming from this particular direction on H1, and then it gave this peak formation low. After that peak formation low, we can see a peak that was issued at the 200 EMA, and this particular peak was actually shoulder, head, and shoulder. So we want to trade away from those peaks. So step 2, after validating a peak, it's either a peak for reset or a peak formation low, we now want to switch to the M15 time frame. So if we go to the M15 time frame, this is the peak that I've marked on the H1 time frame. We want to see a reset of the market on the M15 time frame, just like the way we have been seeing on the H1 time frame. So here we can see there were 3 impulses, 1, 2, 3, and we got this as our low of day, meaning this was our intraday or our M15 peak formation low that was issued. And then we now want to find the M15 reset as I've shown you on the H1 time frame. The M15 reset was issued as an M pattern. We can see first leg, second leg, and then the market went to the downside, basically like that. You could easily book your 50 pips right away after trading this particular pattern. However, M's and W's are thrown everywhere. You can be trapped if you do not know what you are looking at. We can see that in this particular instance, the market went to the 200, crossed 513 to the downside, and crossed 513 to the upside for the second leg. Where were we going to make an entry or trigger? We're going to make an entry at candle closure below the 13 EMA, which is at this particular point, price, stop loss price above structure, and take profit at least at twice what you have risked on your stop loss. So if you do so, you are going to dodge within these particular setups that I'm now about to show you. We can see that on Australian dollar against Canadian dollar, we had this particular, this was my initial anticipation. Unfortunately, they did not give me what I wanted. You can see that this was a W pattern that was issued, but what is wrong about this pattern? We can see it was not interacting with the 200 EMA after a possible or after a validated peak was issued, basically like that. So what we want to see is basically M's and W's that comes after reset or after peak formation low, after counting your levels properly. We can see this was a drop, 250 EMA cross, first leg on the 200, second leg on the 200, and the market went our way, basically like that. So this pattern is something that can make you a lot of money. Of course, you will lose. Every trader loses. Every trader experiences what we call a losing streak. That is the normal distribution within any trading system. So make sure when you start to lose, do not be afraid. So you need to keep on repeat and rinse each and every time up until you are on the positive side. So basically try it, back test, and check how you would perform if you are using this particular trading strategy. Before we close off this video, check out our free Telegram channel. I'll leave the link in the description box below. And on that note, I'll see you in the next one.